With gold shattering record after record, one has to wonder when this will end. It's got to end sometime. Could it be soon? Could it be now? Are we at the top of the gold market? Well, we'll try to answer that question in this video as we explore. And before we get there, we have to also find out exactly what led it to where it is now, to its strongest performance that we've seen with gold's price since 1979. And of course, we know with the major drivers, such as interest rates, inflation, and geopolitics that are part of all of that. I'm going to be referencing in part a piece here by The Guardian that explains some of this and wonders where the sentiment is from here on out with gold. Now, you know that I feel that pretty good about precious metals right now. But I also caution, as I've talked about in an earlier video about silver, is that something has got to stop. What goes up must come back down, at least to some degree, to some extent. What that extent is and what that degree is going to be something that is up for debate and the factors that are driving it. But meantime, dollar cost averaging is so important whenever you're accumulating precious metals. No question about that. And my friends over at Summit Metals know this all too well, and they know that that they can provide excellent customer service, competitive pricing, but also to be able to also buy your precious metals from you, where you can actually cash out on your holdings at a given point in time. I discourage that for the most part, but I also believe and understand that there are not times and needs and opportunities where you can actually make your gold and silver work for you so that you can translate them into these fiat Federal Reserve notes to be able to help benefit yourself or to get yourself out of a bind if that were to come across. But nonetheless, we've seen gold take its best performance this year and part of last as well, but honestly, really since 2022. It's more than doubled in price, by the way, since then. Bullion has hit a series of record highs in 2025, putting it firmly on track for the strongest annual performance since 1979. And that is something that has also been sparked by what happened with the Hunt brothers. And some say that gold went up as a result and followed silver. But I think also there were a lot of geopolitical tensions that were occurring during that time, leading up to the beginning of 1980. Including what was going on with Tehran and the revolution there. There was global consequences of that event. But the short answer is to why gold is in such demand right now is because of the geopolitics. And we've not seen this happen since the Kingdom of Lydia started, churning out some of the gold coins in the 6th century BC. Investors can be jumpy a lot, and there's plenty of reasons to shift money out of the riskier assets today, from fears of economic slowdown to rising geopolitical tensions between Russia and NATO. And remember, gold was valued long before the 6th century BC for its beauty and its adornment and rarity. And I've talked about that in a prior video too. But as coins are being used as money, as a store of value, well, what happened in Lydia certainly made that spark. And of course, people have understood this. And there's no sign of a slowing down with these tensions between nations. Russia and NATO especially are now in a really hot zone at this moment in time. So that's what we're looking at, as well as traditional valuation drivers, such as interest rates, the dollar, inflation, and what's going on with the Federal Reserve, the trade war, and the tax and spending plans are pushing gold higher. And there's a lot of spending that's going on, really more than should be. And it's unfortunate that happens under both either side of the fence in terms of administrations, whether it be Republican or Democrat, conservative or liberal. Seems to always be an increase in spending. It seems like that never really truly slows down, even with the Doge efforts. Really, it's a drop in the bucket as to how much savings there are. But that is kind of what is on the backdrop of where we're at right now. Gold's role as a store of value, in part, comes from its scarcity. According to the World Gold Council, if all the gold ever mined were gathered into a single cube, it would only measure about 22 meters on each side. and the total supplies are rising by an estimated 1.7% per year. That means no policy, no discovery, no quantitative easing of geology can debase gold. And so that is something that's extra special. That makes it attractive when investors worry that governments are losing their grip on the public finances, finding it politically unpalatable to raise taxes and impossible to cut spending. And so, especially when we're seeing more and more central banks hold gold, that illustrates the point I'm making. And we've seen that in a marked turn in 2022 when more and more central banks were adding gold to their coffers. Now, in contrast, copper cannot operate as a store of value as huge quantities are used and consumed each year with demand set by the health of the global economy. Platinum and palladium fail this test too, despite an ounce costing over $1,000 as new supplies are quickly swallowed up by industry. And silver kind of falls in between there and has a dual role as an industrial metal, which is slightly more than 50%. Some say is upwards of 60%, but nonetheless, central banks really not are stacking or holding gold, silver in their vaults. Now we know the two exceptions to that would be Russia, and but that's an argument as to whether the actual central bank is storing silver or if they're just accumulating strategic stockpiles of it for military use and other uses. And Saudi Arabia has been investing in ETFs, silver ETFs, but not actual physical silver in the vaults of any central bank around the world. So since the 1st of January, the spot price of gold has risen by a blistering 43% to $3,760 per ounce as of the recording of this video. That outpaces all other leading assets classes this year except for silver and platinum. Gold hasn't had such a strong year since 1979 when it jumped by 126% as Iran's revolution led to a surge in the oil price, crushing investors' hopes that inflation can be tamed. So that's the backdrop there. But data from the Bank of America shows that $5.6 billion flowed into gold last week. Over the past 4 weeks, the bank says that there were record inflows of $17.6 billion. They're also cautious that gold is tactically overbought, but structurally under-owned, as it only represents 0.4% of private clients' assets under management. It is maintaining a long position on gold, indicating it expects the price to keep rising. And that's one analyst. Gold has further to rise, analysts predict, according to Arnab Das, global macro strategist at Investo. For example, says the gold rally still has legs. So that's the answer according to the professionals. Now, I feel the same. I think we're going to go higher. But honestly, I'm like as is with silver, I'm cautiously optimistic, being so much that since gold has risen to an all-time high when adjusted for inflation, silver still has a long way to go to get there. It's hard for me to imagine it going much higher, but it keeps happening. And I think that it will probably continue as long as central banks keep buying and, more importantly, holding the gold they already have in their vaults. We see no true alternative to gold as a hedge against U.S. risk and expect central bank to keep buying gold. In my view, central banks are buying gold because they see no fiat alternatives to the dollar, according to Das. The World Gold Council says Western investors and speculators have been the drivers of the recent price gains. Now, they cite two reasons. The evidence of a slowing U.S. economy will allow the U.S. Federal Reserve to lower interest rates further. That means the interest on cash reserves will be lower, making it less attractive compared with gold. Second, the increased rhetoric around the Fed and its independence from the Trump administration is leading to concerns about the stability of the U.S. dollar and the Treasuries market. Central banks have also been adding to the gold reserves in recent years, notably China. Bloomberg reported that China aims to become custodian of foreign sovereign gold reserves in an attempt to strengthen its standing in the global bullion market, to become less dependent on the dollar and the Western centers like in the U.S. and the U.K. and Switzerland. They're essentially creating their own LBMA, as it were. So that's what is behind it, and this is why I think probably why most people feel that gold is going to go higher because of all these factors. So it's pretty amazing. Now, I still think it's going to go up even more. Where will the high for gold be? Now, some say that, like Deutsche Bank says, by 2026 we'll see $4,000 for gold. I think that is a possibility. We'll see. But nonetheless, as for me, I'm going to hold on to the gold I've got and ride on through this big rally that we've been seeing. The rally still has legs, and we as holders of gold, we should have legs too, to either buy or hold according to our level of understanding. And I like to bring you the latest news and analysis in the world of precious metals. If you enjoy what I do here, hope you will consider subscribing to the channel and pressing that thumbs up button also as well, and hitting the notification bell. So there you have it. I don't think that we're done with gold's bull run yet. We have not reached peak gold. I think there's going to be more that is in line, and more gifts of higher prices for gold's price. So let me know what your thoughts are in the comment section down below. Hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.